Hi, I'm Steve LaFrance and welcome to our January update. Here's a quick look back at 2025, the late year developments that matter now, and a few things we're watching as we head into 2026. The S&P finished at roughly 18%, with the NASDAQ landing at 21%, international 32%, and emerging markets 34.4%. That rally, however, masked a dramatic intra-year swing. Markets plunged nearly 20% shortly after Liberation Day amid trade policy shocks and political headlines, only to mount one of the most impressive recoveries in recent memory. Ben Carlson from Ritholtz Asset Management described this as perfectly normal and highlighted the fact that 40% of all years since 1990 experienced double-digit drawdowns and then finished the year with a double-digit gain. It reminds us to stay the course. A JP Morgan report highlighted how a narrow cohort of roughly 42 AI-linked companies accounted for an estimated 65 to 75% of the S&P's price return, earnings growth, and CapEx R&D expansion since ChatGPT's launch in late 2022. The market cap of just 4 semiconductor companies and 4 hyperscalers has grown from $3 trillion 7 years ago to over $18 trillion today. In short, it means a small group of firms have carried much of the market's performance. 3 forces drove the late year narrative and will remain the focus for 26. First, monetary policy. The Fed cut rates by 25 basis points twice in the fourth quarter, but signaled a cautious pause, leaving markets highly sensitive to each jobs and inflation print. Since its peak of 5.5% in September of 24, the rate has now been cut by a total of 1.75% to the current rate of 3.75%. Second thing we're watching, AI rotation. Investor focus shifted from broad CapEx enthusiasm to a selective search of companies that can convert AI investment into near-term revenue and margin improvement. Fourth quarter returns showed how tech landed in the middle of the pack, confirming how AI cooled off a bit to finish the year. Third, policy and geopolitics. A prolonged government shutdown created a data backlog, and geopolitical events produced sector-specific moves that amplified volatility. On that note, recent events in Venezuela produced immediate market ripples. Oil prices, energy stocks, and defense sector all jumped amid speculation regarding a peaceful transition to a democratic pro-Western government and geopolitical tensions with Russia and China. Venezuela's 300 billion barrels of heavy crude means any stable, market-oriented transition could be meaningful for a global supply over time, but necessary infrastructure investment means this will play out over years with very little short-term impact. As stated in the beginning, the markets finished 2025 with their 3rd consecutive year of double-digit gains. It's been an impressive run that included a global pandemic, aggressive rate hikes, and the rise of AI. Through it all, the market gains have been supported by solid economic growth and strong corporate earnings. And as we turn the page to 2026, it's important to keep the big picture in mind and remember, we can't predict what lies ahead. But we can maintain a disciplined approach focused on long-term goals, diversification, and risk management. Our team will continue to closely monitor incoming economic data and evolving market trends to help ensure portfolios remain aligned with your objectives. So thanks again for your trust and confidence.